Welcome Forex traders to this video analysis. It's time to prepare for fall because the last week of August has arrived, and in this video analysis we will take a look at the euro dollar, pound dollar, dollar yen, and AUD USD as each and every week. First of all, though, the disclaimer explaining that the material here is for a global audience. It may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. Thank you for your attention on these disclaimers. Before we take a look at the candlestick and price action and technical analysis, we have these webinars coming up this week, Monday and Wednesday. Nenad is going to take a look at some interesting topics like a weekly FX recap and the expert advice on price action. And then Tuesday, Wednesday, Thursday, we have live trading labs, in fact. And on Thursday, we'll discuss how to create an own strategy. So hope to see you in one or all of these webinars. So far, the month of August is looking like a bearish euro dollar, a monthly candle. In fact, of course, we still have 5 full trading days before this candle is closed. But obviously, we are continuing with a lot of downside momentum as yet. And we're approaching some support level like 132, 131, 130, 127. Those are potential bouncing spots. But for the moment, the momentum is down. So each of these candles could see a follow through the next month. So that could happen in September as well. And each of these candle highs and lows would represent important levels. From a bigger point of view, there are interesting things to look at on this monthly chart, because if you look at the current break, it could be a very interesting break if we really get the break of the triangle. What is the triangle? If you connect these two lines here and these two lines, we're in a contracting triangle, and if that triangle breaks, it could be actually part of a bigger ABC, a three-wave correction, in fact, where A is completed, B could be completed, and we could be heading down for C. And C could all the way be down 113, or maybe even ending at parity at 100. Now, how do we know that that B part of things, as I said here, is complete? There are some good things to realize. Is that first of all, the A, B, C, D, E triangle is completed at the 61.8 fib. Also on a weekly chart, you can see there was divergence between these tops right in here, and we had a rising wedge. We broke out of that rising wedge and the support line, so there's a lot of momentum here now to the downside. And the last week's candle, weekly candle, was very bearish. So to me, this looks like a bearish territory. If we zoom into the 4-hour chart, though, we'll see something interesting, and that is that, you know, if this is supposed to get some follow through to the downside, it will be very interesting to see if price could maybe make a bit of retracement here to test the 133 top and then see some follow through down to 131 and 130 and maybe even below 130. So that's primarily what I'm looking for now, a bit of a pullback, because we've had already a pretty good break here so far. But if that doesn't happen, then okay, I will be looking for, if the retracement, as I said, doesn't happen of this weekly candle to about 133, then I'll keep an eye on this daily candle and see if how big it is. If it's a small candle like that, I would just wait personally for that retracement of the weekly candle. But obviously, if we don't retrace and keep falling, I will look for daily candle retracements instead to position myself for euro dollar potential short. Pound dollar is too in a nice downtrend. It broke the uptrend here at this green dot. It's been traveling down ever since. What I'm looking for is 166.50 as a decisive level. That was a broken bottom. So if we hook back and retrace back to the level and respect it, and respect the trend line, we could see a follow through. If we break above it and break above the trend line and break above the magenta line, we could be retracing this entire downside, and that could, you know, be a bigger retracement, maybe back to one of these red lines, 168, 170, before we see a follow through of that downtrend to the downside. So that magenta line, 166.50, is an important level, in my opinion. It could be either the continuation of the downtrend, or it could indicate a bigger retracement potential. Now, just because we retrace up doesn't mean, in my opinion, that the uptrend is gone. We could get, for instance, something like this. If we do bounce, like a head and shoulders, for instance, right here, could be potentially possible if price then starts to move up like that. And we could see a fall then like this. That's also one of the scenarios that I have in mind on the pound dollar at the moment. The AUD USD is quite simple. It's all about the green and the red line. We've been in this zone already for about close to 6 months, close to half a year or 5 months. and the price is not breaking out or below or above this 250 pip zone. Price here struggling again to break to the downside and also to the upside here. So for me, those green and red lines are important. A break to the downside below green, you can see a breakout to test 90 and 87. A breakout to the upside, we can see price maybe retesting 96.30, which is a fib level. The 78.6 fib level, no, sorry, the 888.6 fib level here at 96.30. 886 is a fib number, of course, as well. Magenta line is kind of the halfway that consolidation zone. Last but not least, the dollar yen trying to break out of this consolidation, trying to break above the daily consolidation that we see here. It's testing it. It hasn't broken as yet. If it does, we could see a breakout to very interesting levels, such as, for instance, we have two fibs here. I only need one of them. Such as, for instance, the 111 minus 272 target and the minus 618 target at 120. So that could be tons of pips to the upside. We did have a very bullish candle last week. Look at that. Trying to break out, but we need a bit more evidence that this is a breakout. We did break above these tops. We're trying to break through the monthly resistance line, but the question is, will we indeed break? If we do, lots of space. If we don't, we're still stuck in this consolidation. So I'm cautious until we really break. A weekly candle above that trend line, for instance, would qualify as a breakout, in my opinion. Well, that wraps up today's video analysis. Thank you so much for joining us today. Hope to see you in one or all of the webinars mentioned, and wish you all great trading. Cheers.